something I've been waiting to ask you, right? You have told me, you've helped me be better, talking about good times never last, bad times never last. I think it's fair to say we've left the good times, we're entering or are in the bad times. But when you look at this situation, and I don't know if you look at it this way, so if you don't, cool. But when you look at the environment we're heading into, do you look out, hey, this could be bad for 2 years, 12 months? Do you even think that way? I mean, when you look at what's in front of us, I mean, how do you process this? You're far more, you're much better at this than I am.
Yeah. So, I watch obviously different things for different lengths, right? So,
Sure.
when you're talking about equities, cryptos, things like that, I mean, you're day to day right now, you're headline risk. And, I mean, you've got big moves that could happen at any point in time, day to day. But in terms of, the big macro events, like housing and things like that, and, inflation, Fed moves, things that could really affect longer term, then you start looking out, 6 months, 1 year, 2 years, and there's a lot of talk out there right now that, we're in a recession already, and we're not going to really see the big, deepest parts of it until next year. And it could be a couple of years that, we're in this situation. And traditionally, bear markets and equities and stocks traditionally last a couple of years. Again, we talked about in the last episode, housing doesn't, correct overnight, doesn't happen overnight. Bear markets don't happen overnight either, in stocks. We talked about that big event that happened in March 2009, with everything, but it was 2 years prior to that led up to all that. So, bear markets take a little bit of time to work out and work through. They've been, recoveries have been accelerated recently because of Fed action. And, we've had these V-shaped recoveries like 2017, 2018, when the credit markets broke, but we're not in that position now. The Fed can't just jump in. So it depends on what sector you're looking at, but you got to look at things daily. You got to look at stuff, seasonally, and from the summer to the fall, and, into the holidays with, what we've gone through with the pandemic and supply chains and inventories and things like that. But from a global macro perspective, you got to start thinking, all of that working into the next year, the next 2 years, to really plan what your moves are going to be depending on what you're doing.
Yeah. And really, when I think about our conversations, I really go back to, you created a business from nothing, several businesses, and you've really brought to this channel, hey, something to go look at is maybe buying a business, getting seller financing. So when you look at an economy that's probably going to be certainly not robust for several years, at least, I guess what I'm thinking is you have time, right, to do some due diligence and analysis and really set up the structure, and more importantly, the debt, right? Maybe push the debt off a year. You don't have any payments for a year, or you have half payments, and just people need to be thinking this isn't going to be quick. No V-shaped here, I don't think.
Yeah. And from a debt standpoint, that's a very different animal right now too. So it's a very difficult time to finance businesses and things like that right now from the traditional, debt and credit markets, depending on what level you're looking at. And then you got to think about, what's going to survive in this environment, in this economy. I mean, we fundamentally changed as consumers, as workers, as, just everything in general. The economy has gone through some major shifts, and so has the consumer. So you have to really think about, what is it that you're looking to do? What is your end goal? What's the availability of labor? What supplies? What's your competitive advantage? What's the scalability if you want something that's going to scale? Or do you just want something you can go to every day and, it's just what you do. So there's a lot of different factors that have to go into it. But right now, if you're going to buy a business or, make an investment in a company, things like that, you really got to start thinking a little bit more, near term and long term, because near term, interest rates and, the lending environment and things like that are what's changing rapidly day to day right now. Long term is going to be more, from the standpoint of, the feasibility of the business itself and the business model.
Yeah. Yeah. I think one of the things that I'm getting more and more convinced on, again, because I think lenders get tighter or scared, or whatever word you want to use going forward, for investors, whether that's investment properties, investment businesses, new loans, right? I think the government will make them do first-time homeowner stuff, so that won't be an issue. But investors, I think it's going to be harder to get loans. I think it's going to be lower LTVs. I think they're going to be much more costly. So what I'm trying to learn is seller financing more and more, right? I've done millions of dollars in seller financing on properties and units, but I want to double and triple down. I want to go fish for those opportunities. And I think that applies for businesses as well, don't you think?
Yeah, they're much easier for businesses, and you can get much more creative, and you can get, much better terms when you're negotiating seller financing in a business than you can on real estate generally. Just because the mindset's different, the the competition is different for
Hmm.
a lot of those assets versus housing and stuff like that. And we're already seeing it. I mean, I've got clients all over the world, but particularly all over the country,
Right.
doing all kinds of different things, and they're seeing, to your point, down payments and LTVs and all that change like
Yeah.
at the closing table. I get calls every day. Hey, the bank offered me this the other day. Now they're coming to the table with this.
Yeah.
And just for everybody listening, the bank can refuse to fund the loan up to the point of closing. So you can have the
Absolutely.
loan locked in, everything done. You can go to the closing table to sit down and sign, and the bank says, nope, we're not going to fund, or we want more money, or we're changing your interest rate. They can do any of that.
Mhm.
Now there is, those lending disclosures and stuff that's required, but at the end of the day, they can change anything and pull the plug at the last minute. Nothing is done until it's signed and funded.
Yeah, and if you're in the commercial market, I had a guest on yesterday that was in due diligence on $5 million properties, and between due diligence and eventually getting a rate lock, that it jumped half a point. The deal didn't make sense, So we're seeing a lot of the commercial market's certainly changing because, again, shorter term, right? They're 25-year AMs. They're mainly all ARMs, right? They don't really have 30-year money. I think there's a great reckoning coming to kind of commercial real estate. What do you think?
Yeah, we're seeing it. Cap rates are changing. The debt for those properties changing. Investors are changing in terms of what they have available because they've taken a hit in other areas. So it's a different time right now. And then going back to your point about financing, seller financing, a business versus real estate. For real estate, you have to find an owner that's either in distress or motivated.
Yep.
Or it just makes more sense. From
Yeah.
a tax structure or just income structure, whatever it is. It can make more sense for them, or you're paying a premium, for that property. Say, look, the seller can't sell or doesn't want to sell, for less than what they want. The
Mhm.
market doesn't bring that now, so you could come in and say, look, I'll give you your asking price, but you got to give me my terms.
Exactly.
And you can structure it that way so it works. With a business, it's interesting because, like I said, a lot of them don't have an exit plan. They don't have a lot of buyers lining up, especially for difficult businesses like restaurants and bars and service-based businesses that require work. People don't want to work a lot, so there's not a lot of buyers for those companies. And there's real opportunities out there right now to roll a lot of those up, like landscaping businesses or contracting companies or dentists and orthodontists and, other medical type professionals or restaurants or whatever, so that's a big thing right now. But a lot of the funding for that roll-up strategy is done. So, you've got to use that seller financing. You can't just go raise capital from an equity fund to go buy a bunch of companies anymore like you used to be able to. It's very different.
Yeah. And kind of wrapping this episode up, one thing I'm going to say, I guess, or think, but when I look at the situation, we've been talking now for a couple of years, if not 3 years every week, which I appreciate. Is it fair to say that you're kind of excited for what's coming? Because your entire career has been prepping you for environments just like this, not only for you, but also your students. Is that fair? You're excited?
Oh yeah. Because I've been through several of them, right?
Yeah.
And that, a lot of people haven't been through, any of what we're talking about, and I can't remember what it was. If you're born before, well, if you're younger than 40, you definitely haven't been through any of these cycles. And, so yeah, it's always exciting. So, it's not fun to watch people lose and, things that are happening. But at the same token, you have to always be optimistic. This country, this economy, we always recover, we always rebound. And out of these things come the bigger, better opportunities,
Agreed.
For growth and for scaling and things like that. And, there's opportunities in every environment, but it's much easier now to hit exponential gains when you're resetting than it is at the top.
Absolutely.
Like Kathy Wood, she's been right at the top talking about these 80% annual returns or whatever it was she was promising.
Yeah.
That's like, that's very difficult, if not impossible. But down here, well, it starts to get a little bit more realistic.
Yeah, exactly. It's at 20, it's a lot better than at 80. Yeah, exactly.
She has she used to have a 5-year outlook, then it was a 10-year outlook, and now I think I don't know what it is now. But when you have a long-term outlook, but then you can start saying. But anyways, now it's exciting because these peaks and valleys create opportunities. Things change, innovation happens. I mean, this is when you innovate. Yeah. This is when the biggest exponential returns can be made in business and investments. And that's what's exciting. And talent shifts around to different things, and it's these are the times that exciting things happen. And it's unfortunate for a lot of people, but whatever that valley you go through, man, the mountain that you reach and the peak that you reach on the other side is just always amazing.
Yeah, I'm so excited. And again, I've been following and watching you, reading your stories a lot, and Yeah, I'm really excited for what's going to come. For people that are prepared, we've been talking about it, get prepared. Winter's coming, winter's here. And now it's like, all right, we've got quarters, if not years, to get through this. So don't rush, keep doing the work, keep asking the questions, keep talking to owners. And, eventually you'll add to you. This is the time to build wealth, in my opinion. Yep. So Greg, where can people find you?
Yep. GregDickerson.com. That's where all my info is. Go check it out.
All right. Thanks, buddy.